Here's the reality. The reality is that most Forex robots or expert advisors will eventually fail. Now, how do I know this? Well, I'm going to explain to you some simple math. And on top of that, for the past 6 years, I've been trading with EAs, I've been testing EAs, and I've been blowing plenty of accounts with expert advisors or Forex robots. And in this video, I'm going to explain to you why almost all Forex robots will eventually fail and what you can actually do about it to keep your account safe. Like I mentioned, for the past 6 years or so, I've been trading with Forex robots and experimenting with them. And the reality is that there's marketplaces literally filled with thousands and thousands of EAs that are available for you for a really cheap price. And I've tried a lot of these systems, and over those years, I found out that most of them are shit. Most of them really won't work. And here's why. So one of the biggest problems is that the vast majority of these systems are called martingale systems, or they're called dollar cost averaging systems. And if you're not familiar with what martingale is, it's an old betting strategy that poker players or blackjack players would play with. Essentially, the way that it would work is they'd play a hand at blackjack and say they bet $10 on this hand. If they lose that hand, the next round they'd bet 20. And if they lose that round, then the next round they'd bet 40. And if they lose that round, the next round they'd bet 80. And the reality is that this can work for a very long period of time because, if I lose one, the second round I have, like a 48, 50% chance or so of winning this hand. And so if I just make this win, then I'll win $20. So I'll actually make $10 because the previous hand I had lost. And so this is a very common strategy. The problem with this martingale type strategy is that eventually you're going to run out of money, right? Let's say that you only have, $200 to bet with, and you're betting 10, 20, 40, 80, then you're betting 160. And then the very next loss, you've blown your entire amount of money. And so we see this happening with a lot of systems. Now, if we look at it on a Forex chart, how this actually translates, it kind of translates like this, right? For example, you'll take a buy trade, let's say here, and we're basically waiting for the market to reverse. And if the market doesn't reverse, it comes back down here, and we're waiting for another buy trade. We're waiting for the market to reverse. And if it doesn't reverse, then we'll get in, we'll enter another buy trade right here. And essentially, we're just waiting for the market to reverse. And if the market doesn't reverse, then we'll go and we'll take another buy trade right here. And let's say that finally the market reverses enough to hit our take profit, and boom, we get out of this trade and we actually make money and we don't lose on this set of trades. So this is good and all for a while, but the reality is you will eventually blow your account. And if you take a look at a system like this, there's literally thousands of these on MyFX book that you can pull up. And if we look here, it looks great. Wow, it's making 7% per month. Look at this growth curve. It's so nice, right? It's this beautiful growth curve, right? That just looks like this. However, when you look at the equity curve, you'll see that you have these steep periods of drawdown, which are okay, but eventually the drawdown is going to get so large that it's going to completely blow your account. And I know this because when I first started trading with robots, I was onto the system. I thought it was the greatest thing since sliced bread. I was making consistent money almost every day, or for sure at least every week. But I remember sometimes I'd have these sleepless nights where I would literally not be able to go to sleep because my account would be in 30% drawdown. And I know that if the market just continued to trend just a little bit further, then I can completely blow my account. So these martingale are dollar cost averaging systems. Martingale is just a beefed up version of dollar cost averaging, right? Because each level we're going to bet more and more lots. So say we bet, one lot here, then we'll bet 2 lots here, 4 lots here, 8 lots here, and so forth. Dollar cost averaging generally will just take the same lot size, but it's almost as dangerous, not quite as dangerous, but it is still dangerous if you get into a serious trending market. Now, the reason why these strategies are so popular is because the market does range the majority of the time, but maybe about 75% of the time, it'll be in a ranging market, which in a ranging market is really great. But see how we just went on this crazy trend right here. If we're in a ranging market, like just say here, for example, then these strategies would work really well. So what is the solution if you're trading some sort of dollar cost averaging or martingale type system? which the reason, again, why these are more popular, because the market does range the majority of the time, and the benefit of these and why they're so popular, especially among new traders, is because they're really easy to trade psychologically for the most part, because you're making profits very consistently until eventually you get into a large drawdown. So what can you do if you are trading one of these systems? You absolutely need to have an uncle point. Okay, if you don't know what that is, you need some sort of like safety word, right? Where me and my brothers, when we were kids, we'd grow up and we'd beat the heck out of each other. We'd be wrestling, and then we'd have this safety word. You say uncle, which basically means no, you have to get off because like I'm choking and you're about to kill me, right? So you have to have that point. So if you're trading a dollar cost averaging or martingale type of system, you need to have some sort of uncle point, which basically means that, hey, if the account ever gets into 5% drawdown, or if it ever gets into 10% drawdown, I'm just cutting my losses and I'm completely closing out of all of my losses. Even though I'm going to lose a 10% loss, and I may lose, several weeks worth of gains or a month worth of gains, you need to do that in order to trade long term. So you may be thinking, Adam, well, why don't I just trade a trend following system or a trend following robot? And that's great. The problem with trend following systems is the fact that it's very hard to trade trend following systems psychologically, because a lot of the times with trend following systems, you have a lot lower hit rate. Whereas with martingale, maybe you're in dollar cost averaging systems, maybe you're winning 70, 80, 85, 90% of the trades. But with the trend following system, maybe you're only winning 30 or 35% of the time. So it's much more difficult psychologically. And not only that, the reality is with trend following systems, a lot of the times, their equity curves are going to be more jagged, kind of like this. And you can go through these long periods of stagnation where the system isn't actually making money. So if you just look at this, for example, this is a trend following strategy that had its equity high on August 19th, and it didn't break that again until like January, which, that's like what, 5 months worth of stagnation where you literally didn't make any money. So most Forex traders do not have the patience to trade a proper trend following system. Now, one of the other big problems with EAs or Forex robots is that market conditions change. And you know that even month after month or year after year, market conditions can be very, very different on a particular asset. So while you may have built this amazing system that works really great in 2022, and then you break it out of the box and you start trading it in 2023, and the market conditions are very different, the system may not perform as well as it did. And we see this a lot when we're looking at backtests, right? A lot of the times when we build an EA, we'll want to backtest the system to get an idea of how robust is this strategy? How did it perform over historical data, which doesn't mean that it's going to perform as well in the future. However, it does give us a sense of the robustness of the system. So the problem is that if you are not constantly updating your algorithm or your trading system or your robot to keep up to date with the current market conditions, then the reality is when market conditions change, your strategy may stop working altogether. So the solution to this is that you need to constantly optimize your system to the most current market conditions, while also having a big enough range of data that you're testing over to ensure that it's robust enough and it can work across multiple different market scenarios, but you want to optimize for the most recent market conditions. So what we've done with our expert advisor is create this leaderboard where basically we're able to see the success rate, the profitability of our trading system, and also anytime any of our testers or optimizers backtest or do a strategy or change some feature, or anybody that's using our EA actually changes something, it automatically gets uploaded into this leaderboard. So that way we're able to see what strategies are working best for the current time frame. And I think that if you're trading an EA or a robot that doesn't have some sort of optimization for current market conditions, then I think that eventually your strategy is going to stop working. I don't think that. I actually know that that's going to happen. So the solution for changing market conditions, which are bound to happen, is you need to continually optimize and update your EA appropriately. Which, by the way, if you'd like to see more about our EA and our optimization settings and how we use EAs to pass prop firm challenges and get people funded up to $100,000 and beyond, go on over to propfarming.com and take a look at the free video there. Now, another big problem that I see with expert advisors or robots is that they're curve fitted. And I didn't really know what this meant when I first got started in Forex trading. And we ended up hiring this developer and we paid him a bunch of money. I think it was like 10,000 bucks at the time to develop this system for us. And basically, he showed us this system that was, we thought, the greatest thing since sliced bread. It was consistently making like 20% profit per month. It was had very little drawdown, and it had an equity curve that just grew like this exponentially. It was really tight, and it looked beautiful, similar to how this looks. And when we started taking this out of the box, meaning we started trading it in the live market environment, we realized that the results were very, very different. We realized that, hey, for like a month or two, the strategy worked really, really great because it was fit or curve fitted to the most recent market conditions. However, once the market conditions started to change, then the system like completely sucked and ended up losing money. So what does curve fitting actually mean? Curve fitting means that you're tuning a whole bunch of different parameters so tightly to historical data that you get really beautiful results on a back test. However, when you break it out into the live market environment, it usually stops working, especially if you're not continuing to optimize it. So how do you get rid of this problem of curve fitting is that you need to tune less parameters. So you shouldn't have a million different indicators that are being tuned so tightly to work perfect for historical data. You likely just want to tune just a few parameters so that the strategy can be more robust in the future market. And the other solution is, right, to continually optimize your EA as market conditions continue to change. So the reason why most expert advisors don't end up working is because of poor risk management strategies, not having some sort of uncle point, also trader psychology of not being able to trade long-term trend trading strategies, and the fact that market conditions change. So most EAs are not being constantly updated and optimized. So this is the reason why most EAs eventually fail. And hopefully you've got some ideas about how you can keep your EA or your trading system safer and actually improve the trading system as time goes on. Hey, if this video is helpful, like, subscribe, and turn on the post notifications, and check out some of the other helpful videos on our channel.